The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, folks. And the first request that I had today is to put a chart of Twitter into the room to show you the hanging man that's there. But I wanted to remind you folks that today at the half-hour break we're going to have Mark Douglas on as our guest, the author of the Disciplined Trader and Trading in the Zone, and he has another new book coming out right after the first of the year. And the only way we're going to be able to get Mark back on as a guest is if we have some people call in and ask him questions, because that helps him, because it gives him feedback on what's on the minds of people that are trading. Believe me, he understands the mind of the trader better than anybody that I know, because he's worked with so many traders through the years and helped them with their problems. And, you know, we always continue to have problems, and that's one of the things that he is an expert at. So please think of some questions that you'd like to ask Mark, and you can call in at 877-927-6648, and that'll be at the half hour. Okay, the first chart that we had a request for was Twitter, a chart that I don't follow very often, but as you can see, 3 days ago we had a hanging man. As you can see, all of the opening price was happened at the top of the range, and the market closed in the lower end of the range, and then the next day it gapped down. That is a classical hanging man formation. Now, if you turned it upside down, it would be called a hammer. So it's the same principle, only upside down. So Twitter has made some type of a major top, and the thing that's important here is that it made it with an ABCD pattern since it was introduced several months ago. The other thing that's important is, if you'll notice the volume that we had on Twitter on the day of the hanging man, it was the second highest day since the opening issue, which also means a great deal. So Twitter should have made a major top in here, folks, at that level, and we'll see how it rectifies itself over a period of time. I know it's one of the stocks that hasn't made any money, but they will eventually make some money, and we'll see how it works out. We had a lot of this happening in 2000 when we had stocks that were bid up, but that were not making any money, but they didn't go anywhere but down. Okay, now the next chart that I wanted to talk about is, we'll take a look at the stock market and where we are right about now. So we'll just come in here and we'll just put in the old chart here, and we're going to take a look at the market as we're looking at it right now. And as you can see, we've been down pretty hard here coming into March, and it's going to be interesting whether we make a bottom down in this area or not. We just had the TARP people give us $770 million to bail out Wall Street back in October, yet the market keeps going down. And now we're making a three drive to a bottom pattern as the market is forming this extended pattern down here. We've got the Dow at 7,100 today on March the 1st. And we're going to see what happens. Folks, I know you think that I'm on medication, but I'm not. I'm just trying to tell you a story that I think is going to be very important. I'm just going to show you the history of, what happens to these markets. And, it's different this time, of course, but we're going to be going through this. In other words, when we were here in March of 2009, the whole world was bearish. We were making a three drive to a bottom pattern. As you can see from this chart, the Dow was trading at around 7,100. The low on the Dow was on March the 9th at 6,469. We're now 10,000 points higher than that. The important thing to remember is these markets do repeat, and they do remember. This was the red line that you see on here was the Bradley model. It was due to bottom around the 9th of March, and in fact it really did. So what I'm going to do is to walk you forward to see where we are presently in the Dow Jones, because I think it will give us an idea that there's a potential here that we could have some type of a correction. How much it'll be, I'm not sure. I think it's going to be a lot worse than some people think. But as you can see, we're coming into a Bradley model high that should be coming in either tomorrow or Tuesday. That's the actual, the actual Bradley date. The other thing that's important about this chart is that we left a gap last Thursday on the Dow Jones Industrial Average of 10 points. To leave an exhaustion gap like that in the Dow is almost unheard of. In fact, I have never seen this, and I don't know if it's different this time or not, but we'll have to wait and see. Now, what I'd like to do is to mention that in my newsletter this week, I featured a dissertation, an article by Dr. Andrew Lo from MIT. Andy Lo is probably the smartest man in Wall Street. I don't think there's any question about that. And, that's pretty much, what we're looking at. This is an inverted Bradley model that I put up here. That is correct. It is inverted. And, but that's what it looks like to me. It looks like it's making a top up in this area, because a lot of Bradley dates it's the biggest Bradley date of the year. Comes in on the 2nd of January. Well, actually starts on tomorrow and goes through the 2nd of January. So we'll see if it turns or not. If it goes straight up from there, then the Bradley model is certainly wrong, and all technical analysis that I'm looking at is not good. But what I was getting back to is that Dr. Andrew Lo from MIT, who's in charge of the applied mathematics, and I think it's applied mathematics and mathematical engineering and a whole bunch of other stuff, but he's in charge for bringing all the quants onto Wall Street. If you get into his program, you're almost guaranteed a salary of about $400,000 a year to start on Wall Street. D.E. Shaw and many of these other companies, they get the top of the line of those MIT graduates to do these quant programs that we do. Well, Dr. Lo has written a dissertation about technical analysis and how important it really is, that nothing really ever happens differently, and that what happens in the past will happen in the future, and it's always been that way. And I think if you have a chance, you should read this article. I put it into my newsletter this week, and I know you can get a copy of it complimentary from TFNN, so I would really highly recommend you listen to this article, read this article from this very, very learned scholar, Dr. Andrew Lo from MIT. He's got all the credentials that you could possibly ask for, with multiple PhDs and all kinds of experience with computers, and he has many PhDs working for him doing research, and they do a great deal of research and astroharmonic stuff. And the reason that I know that is they get the same data that I get when they're testing this stuff. So that's one thing that I'm sure of. The other thing is, when he wrote his book, The Evolution of Technical Analysis, he spent the first 50 pages of that book talking about astrology being the first part of technical analysis, and it dated back all the way to the Sumerians, which is about 6,000 or 7,000 BC, when they were looking, at lunar phenomenon. So I highly recommend you take a look at the technical analysis part of what Dr. Andrew Lo was referring to, and I really recommend his book, The Evolution of Technical Analysis. His other books, that he's written several books, of course, but the first one was The Non-Random Walk Down Wall Street, is a very difficult read unless you're a mathematician or a physicist or something like that, because the formulas and calculations that are in there are they're breathtaking. You can't imagine how someone could think of a formula like that, get it to work, but these are how they prove these patterns work, whether they're head and shoulders, double tops, double bottoms, or whatever it happens to be. Either one of those is ready to see what happens with the markets, and it's just history. It's what happens in the past is going to happen in the future. We have some interesting things happening in the market that I think are very, very important. We have the euro trading up at the 138 level. That's the Fibonacci level that we had from going back many, many weeks. On Friday, we had a very interesting situation where the market spiked to 138.90, and then immediately broke almost 200 pips, which is a considerable amount. Even though it's a holiday atmosphere, that's a great deal of selling that has to come in to push the euro down 200 pips, even in a holiday environment. We've since bounced back to the 61% retrace of that, but should we close above that 139 level in the euro, that would tell me that we are most probably getting ready to see an assault on the dollar. And that would mean that bonds would get hit more, even though they've been hit badly already because of higher interest rates, which is not what the Fed is telling us, but these higher interest rates are hurting people. And believe me, the bond markets, the notes and bond markets are 6 or 7 times bigger than all the stock markets. I mean, these are huge markets. People put, trillions of dollars into that stuff. So it's not like, what we're watching when we watch Twitter or Microsoft or Hewlett Packard. Those are little drops in the bucket compared to what happens with the fixed income market. And that's where the problem has been for a while. But, we live in interesting times this time because it is different this time. We still have the margin debt as high as it's been. We have bullish consensus as high as it's been, and nothing has happened. Well, that could go on for another 2-3 weeks, 2 or 3 months. I don't know, but Isaac Newton's law of motion, what goes up must come down, has always worked. You can't show me a situation where it hasn't. And, but this is where we're standing now. We've got a really monster day coming in here next Tuesday. It comes in before that, but I really expect a lot of volatility coming in on the first trading day after the new year, which will be Friday, and it should be a really big day. Now, there's a slight positive bias in the market in January. It's called the January effect. And that means that small cap stocks have a tendency to gain on large cap stocks. That's what the January effect means. People have changed it a little bit, but the original January effect was that the small cap stocks have a tendency to gain on large cap stocks over the first 10 days in January. There's also a market adage that says the first 5 days in January will be the telltale sign of what happens to the rest of the year. Well, if you remember last year on New Year's Eve, the market opened the next day. We left a 20-point gap in the S&P 500, 20 points. The Dow was up pretty close to 300 points, I believe, the next day. And, of course, it was the biggest year we've had since 1997. So whether these little things that they've looked at in the past are going to work again, we will have to wait and see. But from my perspective we're coming into a Bradley market high. All of these patterns are still the same. Okay, folks, we'll be back in a few minutes, and we're going to have Mark Douglas on in about 10 minutes. So get your questions ready if you can.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're going to have Mark Douglas on in about 6 minutes, but I posted into Tiger TV today the long-term chart going back the last 10 years in the New York Stock Exchange Index, and you can see that we've made a double top from 2007. We have finally taken that out. We took it out by about 60 cents. The old high from 2007, we did take that out. Now, as you know, the Dow Jones has gone to a 1.27 expansion, and as has the S&P, and the NASDAQ, of course, has gone, way past that. It's gone all the way up to the 786 of the 2000 high. So those markets have been, far, far stronger than the New York Stock Exchange Index, which is the biggest index of all. But on this particular chart, you have a double top at 2007, and you still have the ABCD coming in from 2009 and 2013, and you have a butterfly pattern that is between 2011 and 2013. You have a butterfly pattern just during this year, 2013, and we have a 2-3 drive to a top pattern, one from August to November, and then we have another one May to November. And so it's going to be interesting as we come in here into early January of what's going to happen here. There's only one other person that I know of that is as bearish as I am, and that is John Hushman of Hushman Economics. And so we'll see what's going to happen. But this is what I do. I mean, I might be wrong this time, but boy, it sure looks clear to me, what's really getting ready to really unfold here. I've had a question about the gold market. We believe that we're making a major bottom down in here in gold. The question is whether we're going to try to go down to that 1170 one more time, which is the long-term 61% retracement in gold. We got to 1185 just a few days ago. We had a little bit of a rally. We've had a minor test down here at the 1200 level overnight, but we could still very easily get down there because we're only a few, less than $40 away from that level, so it could very easily make that. It's going to be very, very important to watch that because as we mentioned before, some of these gold stocks have finally looked like they're ready to turn and go to the upside, and whether that's going to be the case, we have to wait and see if that's going to happen. One of our listeners asked me a question about the QE programs that the Federal Reserve does. Frankly, I wish I could answer that question, but there are very few people. In fact, there's none of the people that I know that can answer the question. But the Fed has been in business this time for 100 years. They started on Christmas Eve of 1913, and so they've been in business 100 years. My question is, why did they wait 97 years before trying this before? I mean, they got some pretty smart people in there. They got 12 Fed governors plus all the research analysts and all the other stuff that they have working for them. Why didn't they try this sooner? And why didn't they try it during the time when we were going down, losing Lehman Brothers and Bear Stearns? I don't understand that, and I don't think some other people do either. But history will tell us, how this turns out. But they put a lot of money, into the economy, and we still have relatively high unemployment. And our GDP is still not growing very much, so hopefully this is all going to turn around here, and we'll get moving back to Camelot, and then we'll be able to we'll see where we are, down the road here to see if things are going to be okay. Just try to remember, if you can bring your questions to Mark Douglas today, folks, because he likes to hear from us. It makes the show move smoother, and I'm hoping to get Mark to do a webinar for TFNN, which you guys would just blow you away when you hear somebody like that talk for about an hour. It's really quite spectacular, because at his level, he just doesn't do much speaking anymore, and if I could get him to do that, I think it would really be a benefit to everyone, because our business is so much mental. I mean, it is so much mental. If you're tired, if you've got other things on your mind, if you haven't done your homework, you're going to have a bad day. But if you're well rested and you're focused and you know what you have to do, technical analysis will get you to the promised land. Okay, we got the markets about unchanged on the day except for the Dow. We'll be back with Mark Douglas right after the break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and I think we have Mark Douglas on the line. Are you there, Mark?
I think you've got him.
Hey, you sound very familiar anyway. That's a good thing. Hey, we have a first question. The first question is, has the advent of algorithmic trading in computers changed the psychology of trading very much?
I wouldn't think that it really has changed it at all. Just because you're on the other side of a trade that's been generated by a computer really doesn't change your individual psychology in terms of how you go about making consistent profits. I mean, if what you're saying, let's put it this way: if what you're saying has that kind of high frequency trading, let's say, altered the character of the market compared to, let's say, what it used to be like 15 or 20 years ago, probably on a tick-by-tick basis it may have. But overall, if you look at your, you look at your charts and you look in your various time frames, I would find it very difficult to detect any differences at all between a 30-minute bond chart, a typical 30-minute bond chart today, and pick a 30-minute bond chart for over a 3 or 4 day period 20 years ago, and tell me if you see any difference in the patterns.
Yeah, that's absolutely true.
I mean, do you agree with that, Larry? I mean,
Oh, yeah. Yeah, absolutely. I mean, I've known you 30 years, and back then, the volume in the stock market was about, I think, about 1/8 of what it is right now, and we have more than I think more than 20,000 other commodities to trade with the options and all the other things. I mean, so the volume is just blown completely out of the sky. So it's got to be the same. I can't tell the difference between a 5-minute chart from 1976 in the bonds and the one today. No one can.
Now the caller who asked the question may be thinking that there might be a difference in fills. That I'm not sure of. Whether or not there's there's a real detectable difference in the kind of fills you get because let's say a good percentage of the volume that might be on the other side of your trade is from high frequency algorithm program, but I wouldn't really know.
Yeah, we'll have to wait and see. I know they keep this stuff very, very secret. I mean, some of these companies that Renaissance, with Jim Simmons and then D.E. Shaw, and the fellows that work with Andrew Lowe, well, they have higher security than the CIA, so they must have some really, really hard things to talk about,
Yeah, and I've read too where a lot of these these big companies that have the resources actually are buying or leasing space as close to the exchange as possible, or the exchange's computers as possible, so that the amount of time that it takes for for the information to get to their computers is, let's say, 1/1000th of a second less than what it takes to get everywhere else, and they can program their computers to take advantage of that 1/1000th of a second.
And that means something with this kind of volume. I mean, because if you're trying to buy 50,000 shares of say Yahoo, and there's only 20,000 shares on the other side, you're going to move the market. There's no
absolutely
question about it. Yeah. We have a question from our good friend Danny in Atlanta. He wants to know if you think that the Federal Reserve and its quantitative easing programs has changed the psychology of traders.
Danny, I really can't answer that question. First of all, I don't really pay attention to stuff like that. I look at the market more from a technical perspective, and what I'm not that I don't take that kind of fundamental information into consideration, but when you get right down to it, if your objective is to make consistent money, you really don't have to go beyond just trading the pattern. I mean, I think that the title. What's the title of your radio program, Larry? Trade What You See?
I don't really have a title. It's just Larry Pesavento online or something.
Well, that's what the guy that set up the phone call said, that it was a trade. The name of the program was Trade What You See.
Okay, that must be what it is. I never see it, so I don't really know.
That's what I do.
It is. It's Trade What You See. That's correct. That's it. Yeah. Mark, you gave me the name of the book. If you remember when we were writing the books together, that you said that's what you should call the book, and that's what I named it. Hey, we have a caller calling in from Ormond Beach, Florida. Mike, are you there?
Yes, I am.
Oh, say you got Mark Douglas on the line. Go ahead, Mike.
Okay, Mark. Pleasure to speak with you. And my question is, with all your experience, do you think that we are at or very near a major market top for the broad market at this time?
Mike, I wish I could answer your question, but here's the problem with me answering it. I don't know if you're aware of this or not. I mean, I think Larry's probably mentioned on the show a couple of times that I've been writing a third book, and I thought I was going to be done with this book a long time ago. It being a third one, with the difficulty and the complexity of my first two books, Trading in the Zone and The Disciplined Trader, I really thought this was going to be relatively easy. It's turning out to be far more difficult and far more complex than my first two, and that's because of the approach that I'm taking and how I'm teaching the material. But the reason why I'm saying that is that I was back in, I think, around May of 2011. I was going for like the big push to finish in 3 months, thinking that it might be done by the end of September at the latest of 2011. Right. And as a result, I turned my trading program or turned my trading platform off. I haven't turned it on since. So I believe it or not, I don't really pay attention to the markets right now. I'm totally, completely ensconced in trying to finish this book, and so I really couldn't answer your question.
Okay.
Sorry.
That's okay.
Great. Yeah, thanks for calling in, Mike.
Okay.
Yeah. That's right. What people don't realize, Mark, is the intensity that you have behind the books that you write. And this new one, I know from personal experience, reading parts of the chapters is really going to be a breakthrough to traders. It's going to expose them to some of the things that they've never even considered in trading that are very, very important. I know it's going to be a watershed book, and I think that you're actually you said sometime after the first of the year. Did you specify which year?
Yeah, I really am. It isn't like it would be like me saying this 3 years ago or 2 years ago. I am legitimately getting close. Not quite done yet, but actually, I would say probably by maybe by the end of January, I could wrap it all up.
Oh, that's good. And people can reach you online, right? Just go to
markdouglas.com. Yeah, I have a website, so.
Yeah, great. Now, I had one other question here from a caller in Minnesota, and he wants to know, he said, if I'm a brand new trader, what is the best way to get into the mental part of trading? But he paraphrases here without saying psychiatrist.
And I can answer this relatively, let's say relatively quickly, without, of course, not being able to get into a lot of detail. But what is this person's name? Do you have a name for him, or?
Yeah, Jeff. Jeff.
Yeah. There's basically four primary areas that you're going to have to pay attention to as far as the psychology of trading. And three primary, but the first thing you're going to have to do is find a good edge. And when I use the term edge, you have to keep in mind that it implies a probabilistic outcome, meaning that whatever technical method or whatever, even if you're using fundamental analysis as a way to determine when to get in and when to get out of a trade or timing your trade, you're going to want to think of that reason or reasons that you use as a justification to do what you're going to do as simply an edge, meaning that what you're doing is putting the odds in your favor, putting the odds in your favor over, let's say, a series of trades, as opposed to thinking that individual particular trade is going to win, especially when it comes to technical trading. In other words, if you've got a chart pattern like Larry teaches Fibonacci ratios and Fibonacci patterns, if you've got a particular Fibonacci pattern that you're looking at, and it's and the pattern has completed itself, you've got a legitimate buy and a sell signal. The problem is, one of the things you're going to have to realize after you get the edge, in other words, after you learn how to recognize these patterns that repeat themselves over and over again, that the individual signals that you get on any particular trade are just giving you the odds of success, and you have to look at it over a series of trades. In other words, a sample size of trades. So, for an example, that's the way I trade. I don't trade on an individual trade-by-trade basis. What I do is I say, you know what, I've got this particular edge. I've tested it over a series of, let's say, 100 trades or 50 trades or whatever. I'm getting, let's say, 70% winning trades, maybe 20% losers and 10% scratches or whatever, based on how I place my stops. But the point is that there's a random distribution between wins and losses over that 25 or 50 sample size trade set. So on each individual trade, I look at it like, I don't know what's going to happen on this particular trade. I just know that if I execute all these trades properly, that at the end of that sample size, I will have made consistent money. Now, the point is that once you've got that edge, what you're going to find your biggest psychological problem is execution, meaning that you're going to have to be able to execute flawlessly based on the rules of the trading, of the trading plan that you've devised for yourself, and that's where people really have a lot of problem, is in execution, because it's virtually impossible to execute properly if you're afraid of being wrong, if you're afraid of losing money, if you're afraid of missing out, and you're afraid of leaving money on the table. Meaning that you have to address those four primary trading fears before you're going to be able to do it properly. And that's where people really make probably where the biggest downfall is that they don't address those particular trading fears. And all those fears can be addressed by learning how to think in probabilities. Now, we obviously don't have time in this particular program or whatever to go over all the dynamics of how each individual does that. But that is where the huge differences lie between traders, between people who can do it and people who can't, or people, who are maybe are possibly on the threshold of doing it, is that everyone's got a different mindset. Everyone has different tolerances for what they're afraid of. I mean, in terms of how wrong they can be or how much money they can lose. And as a result, everyone's going to have, a different learning process that's going to take a different amount of time. It would be the equivalent of doing something like this. If you were, part of an NCAA, a major college basketball team, and you were in the NCAA finals, and you were in a situation where, with 30 seconds left or 10 seconds left or whatever, you got fouled, went to the foul line, and you had a chance to win the NCAA championship by making 2 foul shots. Okay, by making 2 free throws, one tied a game, 2 to win it with making 2 in a row. You could have practiced making those free throws, and maybe in practice hit them 25, 30, 40 in a row. But what's gonna make the difference between making it in that situation is your ability to just let your muscle memory take over and not think about the consequences of missing those shots. Now, the kind of thoughts that are going to run through your brain at that moment when that ball leaves your fingers is going to determine whether or not the ball leaves your fingers in the appropriate way, or the ball leaves your fingers just, with enough of a difference to cause you to miss the shot. And that's what traders don't realize, that when it comes to trade execution, that's the situation they're in. They've got to get their minds clear. They've got to get their minds completely clear of any fears so they can do exactly what they need to do when they need to do it, and then let whatever system that they have, whatever methodology and trading plan that they've developed, work itself out to give them the kind of profits that it can potentially give them.
Boy, Mark, I wish we could have taped this last 10-minute segment, because if people could listen to this every day and anchor this before they started trading, they would be far better off to be able to handle those 4 fears. Because, the fear of being wrong, fear of losing money, and fear of missing out, and fearing leaving money on the table, those are the killers. And, that goes into the back part of your brain, like you say, and it really makes it really, really difficult to be successful. We've got a caller.
Let me add one thing though, here, Larry.
Sure.
That a lot of people don't realize. You see, what makes it so difficult is that it's real easy to actually find yourself in a winning trade. In other words, it's real easy to make money. It's not really. So as a result, people think that somehow or another being a successful trader should be as easy as it is to actually find yourself in a winning trade. Well, we can find ourselves in a winning trade by just simply pointing and clicking. At any given moment, put your cursor on the buy or sell button and click, and you can find yourself in a winning trade. And it might not just be for a few ticks. You could actually just by chance, hit the bottom of a trend, and the market goes up, for however long. The point I'm making is that because it's so easy to make money doesn't mean that it's easy to be successful. Because to be successful, you have to address those fears. There's just no way around it. There just is absolutely no way around it.
Wow. Okay, we've got a caller from Tampa, Florida named Scott. Scott, are you still there?
I'm here. Can you hear me, Larry?
Yes, if you'll stay. We got a little break, Mark. Can you stay with us for about a minute, and we'll finish up here with Scott?
Okay, fine.
Okay, thanks a lot, Scott.
Sure thing.
Mark, you there?
Yeah, I'm here.
I can't tell you how fabulous it is.
What?
Yeah. Fabulous.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, folks, we're back with Mark Douglas from Arizona, and we've got Scott in Tampa, Florida. Scott, fire away. You got Mark on the line.
All righty. Can you hear me? Hey, Mark. You know, Mark, I want to say a couple things. One is a compliment, but also as a tool for people who might have read your book and perhaps they didn't get as much as they could, or for people who will read your book, an observation I made. And I've had your book, but what happened was last year I had the very good fortune of approaching Larry, and Larry has mentored me and helped me with the markets, and I've been around the markets for a pretty long time, and I found it just a tremendously positive experience. So, and I know as a result of that relationship how close your relationship is with Larry. But what happened was, in part of the mentoring process, Larry suggested that I look at your book to deal with some of my issues, and I wanted to give you an observation. But preface that real quickly. I'm very intense in the way I approach things. I'm a very good student and a very intense student. So what I did with your book, I got an Audible because I wanted to listen to it, but I also had the written, but I used the Audible. And I would listen to it, and then I would write some notes on it in OneNote, which is something on my computer, but I would take notes. And what I found was when I tried to make notes on your book, that I had to be very careful because the words you choose and the thinking process is so precise that changing something by one word can really change the whole concept.
You got that right.
And the thing is, that's the gift of a very good author, assuming that the topic matter is correct and the insights are good, which I believe is true. But the other thing is the way you use the English language is very, very precise. And if you're a reader and you read with a lack of precision, or you don't understand exactly how important the syntax of the sentence, the words, the exactness of it, you may not perceive the true value because you're not reading with the same precision that the author used to write the book in the first place.
Right.
And so what I found was, basically, Mark, I rewrote your book. In my notes. But that forced me to think about exactly the importance of the words and your gift as an author, and not just in your ability to pick a subject matter, but also to articulate it with precision. And if you don't approach that book as a reader with precision, you will miss the value of the book.
That is Scott, that's a phenomenal observation. It really is, because you are dead on. You got it right. I mean, because the amount of effort that I put into choosing the right words. I'll give you an example. I'm finishing up a chapter right now that's basically 12 single space typewritten pages, and not including everything that I'd written in another program. It was an outline processor that it makes it easy to actually compose. But now I'm actually writing in Word, Microsoft Word, so in a finished form. Even once I transferred, let's say from this chapter, all the ideas that would probably amount to about, I'd say maybe 150 pages, single-space typewritten pages of composing ideas and ways to put these words together that convey exactly what the reader needs to understand, to get the concept. Once I transferred it to Word, if you look at all the alternative ways that I've tried, or the alternative ways that I've used to put these words together, that 12 single-space typewritten pages is a document that's now over 60 single-space typewritten pages. The other 48 pages are stuff that I didn't use.
Oh, dear.
I know we're running out of time. There's something. I have a wish list for your book. I don't know what your book is, but I'd like to email you something. There's something I would like to get from you as an author. It's with your precision. Maybe something I would hope you to put.
Yeah, just, email me at markdouglas.com.
Okay, cool.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.